So today we're going to be talking about the new crypto ETF from BetaShares called ASX CRYP. Previously, we had a look at a similar ETF called FTEC by ETF Securities. That is a fintech and blockchain ETF. So go check that video out as well. Link in description. If you guys are new here, my name is Fyzee. This channel is about finance and investing. Before we begin, as usual, this video is not financial advice. I'm not a financial advisor. Please don't invest into this ETF if you haven't done the research. Let's jump into it. So ASX CRYP is the BetaShares Crypto Innovators ETF, and this pretty much gives people exposure to the leaders of the emerging crypto economy. Now notice the wording here. They've said leaders of the crypto economy. They haven't said actual cryptocurrency. Nowhere does it say that the fund is investing in physical, like, Bitcoins and Ethereums and other cryptocurrencies, because it's not. The fund is actually investing in listed companies around the world, publicly listed companies. It's not actually investing in those actual Bitcoins directly. So based on that, there is no direct exposure to those crypto coins, but of course you can get some indirect exposure through the companies in this ETF. So if you're only really buying this ETF just to get direct access to those coins, you're going to be a bit disappointed because obviously there is no direct exposure. Now, according to BetaShares, there's a few reasons for this, and one of the reasons is because it's a great diversifier by having companies in there and companies only. Obviously, with companies that are listed, you have the full financials there. You can see, the cash flow statements, the balance sheets, the profit and loss, and everything is pretty much regulated. And you can really see how the companies are making money, and they obviously have to, report to shareholders and whatnot. But with actual crypto coins, there's no real fundamentals there. There's no real cash flow. So it's really hard to actually value those coins. And the second reason is because I read somewhere or heard somewhere that at the moment, ASX hasn't actually signed off on it just yet, which pretty much means that at the moment, these ETFs can't actually hold those cryptocurrencies onto their funds, not now at least, but in the future, this may happen. So let's just see what happens there. And of course, lastly, this ETF is passively managed. It pretty much tracks an index, which we'll have a look at in just a second. Jumping into the benefits of ASX CRYP, as you guys can see, you can obviously invest in a sector with strong growth potential. Of course, the crypto economy has been growing strongly, aided by Bitcoin, Ethereum, and some other digital assets as well for the past 10 years or so, with this growth looking to grow even more into the future. And that's the thing, right? You simply cannot deny the potential, or if you are denying the potential of cryptocurrencies, you cannot deny the amount of interest that is created in these currencies and all these, different coins and all these different, projects and whatnot. Especially young people are more excited than ever, and the future kind of seems to be growing on this new crypto trend. And if you just take out all the fluff that surrounds crypto, all of the hype that's going on with people, pumping coins and whatnot, if you just get rid of all that stuff, if you just look at the actual technology that is surrounding these coins and these projects, I think that is the most interesting part. And looking at the next kind of 10, 20, 30 years, I think this is going to play a huge role in pretty much every industry that's out there. Personally, I've said it before on this channel, like I work for a bank at the moment, and just looking at the processes that we have and how inefficient things really are, some things that literally take, weeks and months to do can be done, almost instantly or in a matter of days with these new types of technology. So it's going to be really interesting to see, what actually happens in the future. Because one thing you guys have to understand is that crypto and blockchain and all these different things that are coming up now don't actually just help the finance industry or the banking industry, but they can really be applied to pretty much any industry out there and making it, much more efficient, and also, unfortunately, replacing jobs as well if done right. So that's going to be another issue that we're going to face, moving forward. Looking at benefit number 2, we have exposure to the crypto core infrastructure. Now, basically what this means is that companies in this portfolio are directly working in the space via mining, crypto trading and things like that. So pretty much you're getting access to the actual infrastructure of the companies that are doing real work in this industry. And according to BetaShares, this is pretty much the picks and shovels approach. And you'll hear this a lot. Basically, you would have heard that back in the days in the gold rush, the people that actually made the most money were the people that were actually selling, pickaxes and shovels to the actual miners, so the miners can go out and mine stuff. But the real money was actually made in selling the actual tools to those people, right? So in a way, this ETF is quite similar, where you as the investor, you're pretty much investing in the actual companies that are going out and doing the work, but you are actually benefiting from investing in those companies and actually, getting the growth of those companies while the real work is done by the companies, but you actually have exposure to the companies, if that makes sense. I said companies so many times in this, but let me know if it actually makes sense. And benefit number 3, we have convenient, cost-effective exposure to the crypto economy. Now, this is pretty much a standard benefit of ETFs. There's pretty much a pool of companies, and the ETF pretty much tracks those companies and tracks the index. And people are quite familiar with ETFs in general, and they might not be very familiar with crypto. So to actually get exposure to this overall sector, it may be quite easier for them to just buy this ETF and getting exposure to those companies while being very familiar with their own brokerage platform. And the other thing is, many people may not have the risk appetite to actually hold these coins directly, because you would have seen with, Bitcoin this year, it literally went from 60k USD to like 30k USD. So literally, fell by 50%. And that sort of fall in a stock market is really huge, right? It doesn't really happen very often, but if you're holding a coin, this sort of stuff is pretty routine, I would say. It happens, quite frequently. You see massive drops and massive swings upwards. And a lot of people who just invest in the stock market may not be used to seeing such insane, swings, ups and downs. So this ETF may be a good way to actually access the sector. Looking at the returns for the ETF, we can see that today it went up by about 2.7%, which is quite good to see. Looking at the absolute max return, it is, really just listed quite recently. So the return has been about 8.8%. And the ETF started on 5th of November. So it's only really been about 10 days, 10 calendar days. Now, as I mentioned a bit earlier in the video, this ETF is passively managed. So let's actually have a look at the index which the ETF is tracking. So this is the index. As you guys can see, we've got the Bitwise Crypto Innovators 30 Price Return Index. Bit of a mouthful, but as you guys can see, it started off at about 6 months ago at a price or at a unit of 5k, and since then the return hasn't really been too positive. It's been slightly negative at about 4.7k at the moment, but we only really have 6 months of data at the moment for these companies that are listed, so make of that what you will. Obviously this crypto space is very new. We only really have 10 years worth of price data, I guess, for Bitcoin and stuff like that. So you are going to find that there's not much price or index data for these types of ETFs. Now, as I say with most of the ETFs that I talk about on this channel, and you're probably sick of hearing this, but have a long-term view when it comes to this sort of stuff. Obviously, crypto is quite new. We only really have 10 years worth of stuff in the past, obviously, as you guys know. So always keep that in mind. We're nowhere near the full potential of what crypto can be and where we're really going. So having that at the back of your mind is going to be very helpful in kind of staying true to the course if you do decide to invest. Now, when it comes to buying this ETF, you can actually buy it brokerage free right now using 4 different methods with 4 different brokers. Check out this video right here. This video will pretty much outline all those 4 methods. I'll walk you through as to how to actually do it and get exposure to any ETF that you want. Jumping into some high-level information about the ETF, as you guys can see, the management fees are about 0.67% per year, which turns out to be around $67 per $10,000 invested. Now, if we actually compare this to the FTEC ETF that we had a look at in the previous video, ETF Securities is charging around 0.69% per year. So ETF Securities is a bit more expensive. However, just have a look at this. So if you have a look, they've got 2 asterisks here when it comes to management costs, right? And if you actually scroll down, you can see that certain additional costs apply as well. Please refer to the PDS. Now, if we actually do have a look at the PDS, there are transaction costs involved as well at about 0.08% per annum of the fund's net asset value. So there are going to be some transaction costs there. So if you actually add 0.67 plus 0.08, the actual cost does turn out to be 0.75% per year, which is about $75 per 10k invested. So based on these costs, it does seem to be more expensive than the ETF Securities ETF. But just keep in mind that the ETF Securities ETF includes fintech companies as well, whereas this ETF or this fund is pretty much all crypto companies. So while those 2 ETFs are comparable, they aren't exactly the same comparables. Just keep in mind there's different types of holdings in there. But I do think it's fairly reasonable given what it's tracking, and given that this is not a broad market ETF, the fees are going to be fairly high. It's a it's a thematic ETF. Obviously, if you're comparing a broad market ETF like A200 or IVV to this sort of ETF, of course the fees are going to seem like ridiculously high. but just keep in mind that this is not any of those ETFs. This is like a thematic ETF. So generally the fees are going to be above 0.5% to around 1% as the upper level. Now, in case you're curious about the FTEC ETF by ETF Securities, check out this video right here or click the link in description. That video is a very similar video to this one. I pretty much review the actual index and the ETF and give you my overall thoughts. Check it out, link in description. Looking at the dividends, we can see that it is at least annually. Of course, this ETF is targeting growth, not income. So dividends is not going to be a very big feature for the ETF. It is mostly the price growth that you will see, or hopefully will see, as the trend grows. Looking at the holdings for the ETF, we've got Marathon Digital, Galaxy, and look, I'm going to be very honest here. I don't know a lot of names on this list, of course, but only a few names I've heard of and I know about, like Coinbase, MicroStrategy, and of course Hive Blockchain. So let's talk about these. Now, Coinbase is the cryptocurrency exchange which recently IPO'd this year. Of course, they allow retail investors to buy and sell cryptocurrency, but they also help out with the institutional investors as well. So with large corporate clients and fund managers, they also allow, those types of customers to buy and sell crypto, which is very interesting. They don't just deal with the retail level, but they've got other kind of revenue streams coming through from the corporate level as well. Now, in the second quarter of 2021, as I spoke about earlier in the video, Bitcoin fell from 60k USD to about 30,000 USD. Now, that actually made the Coinbase trading volume quite active, right? More and more people were actually trading crypto. So although the underlying crypto price was falling, the activity for Coinbase was increasing, and they probably made a decent amount of money, in that sort of time with, trading fees and things like that, which is pretty interesting. So if you were someone who was just investing in the underlying crypto, you would have obviously seen a massive decrease, but the actual company did fairly decently during that time in terms of trading volume, and the actual user base increased as well for Coinbase during that time. So basically what I'm saying is that when things get super volatile when it comes to the actual cryptocurrencies, for companies like this, it can actually be better for business because it means more trading activity, more volume, more user base growth. So it can actually be good in a way. Looking at the other company in this list, we have MicroStrategy, which holds around $5 billion in Bitcoin, which is literally insane. They're obviously a very big holder of Bitcoin. At the moment, they have around 100,000 Bitcoins, which is literally, insane to really think about. Just think about if the price of Bitcoin was to, increase, how much money they would really make in the future. And this ETF also holds some Bitcoin mining companies as well, which pretty much mimic the price of Bitcoin and crypto in general. And according to analysts, as I spoke about in the previous video, these mining companies can be about 70% correlated to the actual price movements of Bitcoin. So if Bitcoin was to increase by 10%, generally speaking, these mining companies will also increase by about 7%, and vice versa if it goes down as well. So when you invest in these types of ETFs, you are getting that indirect exposure, which I spoke about earlier. Now, this ETF is also focused on 85% pure play, which means that 75% of the revenue for those companies has to come from crypto and crypto-related activities, whereas 15% can just be companies that are just doing meaningful work in this space. So companies like PayPal and Square, these companies are included in this ETF as well. These companies are doing kind of meaningful work as defined by, these guys in the crypto space, so they're included as well. But if companies are doing direct work in this crypto space, they're of course given a higher weighting. Looking at the sectors, we've got software at about 50% almost, capital markets at 26%, banks at 13%, and a few kind of tech sectors like tech hardware, semiconductors, IT, and internet marketing and things like that. And then lastly, country allocation is again, very heavily leaning towards the US at about 77%. Then we have Canada at about 10%, China at 5%, and then a few kind of European and Asian countries as well. And this sort of allocation we saw in the FTEC ETF as well, with about majority allocation in the US. So it's fairly similar, but just make sure that you compare the holdings to make sure that you're not overlapping when it comes to buying these two ETFs if you were to buy both ETFs. Now, I also recommend you guys check out the podcast Shares from Beginners. There was a guy on there recently talking about the CRYP ETF, and the guy actually works at BetaShares, so he gave a pretty good insight as to what the CRYP ETF actually does. So go check it out, link in description. It'll be a very kind of helpful episode. It only really goes for about 30 minutes, so go check it out. I think it's going to be pretty helpful. Now, if you enjoyed this video, check out this video right here. This is of course the FTEC ETF that we spoke about many times throughout this video. This is a very similar and almost comparable ETF, so go check it out. And guys, thank you so much for watching. Please like and subscribe, and I'll see you in the next one. Bye now. But if companies are doing direct work